Recording in progress.
Right.
All right. So basically we're gonna go into like what's how it's gonna be, along the way on the boot camp. It's gonna be 4 weeks, as I said. It's gonna be 1 day, 1 hour per day, Monday to Thursday. We're gonna go through like the whole strategy. We're gonna go, step by step with the information. I don't wanna get you guys overwhelmed with all the information just, at once. I'm gonna try to do we're gonna do like one subject, a topic per video. So for example, today we're gonna talk about market structure. So when it comes to you guys reviewing the information back again, it's not gonna be that difficult for you guys to find the information because you already know, like, okay, video number one is all about market structure. Then next day, it's gonna be order blocks, then price section, liquidity, type of entries, trading plan, risk management. And then after that, it's all going to be more back testing. And, you guys basically be involved into practicing the strategy. I like to do like most of the time, like the entire week on the first week, at least to get the whole strategy, explained. And then after that, it's gonna be all into back testing because yeah, it's pretty easy for me to give you the information. The difficult part is gonna be for you guys to apply it and to be able to master it. So I want to spend the more time into, get you guys going into the practice and be able to understand how to use it, instead of just wasting time into giving you the information because it's important, right? I'm gonna give you the whole information, and sometimes or some of you might not get the information like at once, right away, which is fine. That's why we have enough time for us to go through it. But the idea here is to get the information and then go into back testing and practice, for you guys to be able to master it and be able to apply it during the boot camp. So when these questions start coming up, I'm gonna be here for you guys and help you along the way. Okay. So as I said, I'm gonna go through like, I don't know how long have you guys been trading, but I like to do everything like from scratch. Like somebody that's basically brand new to Forex or trading, I'm gonna go into explaining the way that I see things. And I know you might, as I said, you might guys been trading for a long time, maybe not. You've been taking somebody else, training or boot camp or strategy. The thing is like, there's a bunch of different ways to trade, and most of them works most of the time. The thing is like people maybe doesn't fit their personality, or they don't give enough time for it to work. The way that I'm gonna explain things here is might be a little bit different from what you guys already seen before. Maybe not. Especially when it comes to market structure, I see market structure a little bit different from what people go through and explain on YouTube and things like that. But the idea here is for you guys to follow everything that I'm gonna say and teach you guys here as I'm gonna be teaching you, right? It's gonna be like doing exactly the same thing that I'm gonna be teaching you here. You don't have to change anything, you don't have to add anything. Everything is organized, everything is already proven to work. Everything, as I said, is set to work. It's just literally follow it, master it, and then just start applying it. It's gonna be a time to trade, pair to trade, stop loss, take profit, confluences, what we have to wait for. Literally everything is gonna be there for you guys to just follow the strategy and be able to start making money. You don't have to change anything. If you start changing things, that's when things start get complicated, and you're gonna be delaying your progress into getting consistent fast. Okay, so that being said, we're gonna go into the first topic today, which is gonna be market structure, and I'm gonna go through everything. If you guys don't understand something, let me know right away. I don't want you guys to hold any questions or hold something that you might not understand. Like I'm gonna be asking tomorrow, because when you do that, definitely you're not gonna get the information the right way. Okay, so if you guys have questions, just let me know right away. And if we have to repeat everything, twice or three times, that's fine. That's what we're here for you guys to be able to understand things and understand it. Not just, okay, I get it. I want to understand it and be able to know exactly how to apply it. Okay. So when it comes to market structure, okay, I see market structure in two types. I see it internally and I see externally. That's how I see market structure. So let's say we're looking at like say a 4-hour time frame, okay? And we're looking at an uptrend structure, creating higher highs and higher lows, okay? So this is gonna be my external. The external is the one that's gonna be telling me the direction of the market, my bias mainly, right? So if I have a 4-hour time frame on an uptrend, that means that I'm looking for buys, okay? So what is gonna be my internal structure? It's gonna be that minor structure that is created with the pullbacks of the bigger time frame. So every time market do a pullback or a retracement, that pullback is going to be reflected as a lower time on the lower time frame as an internal structure, which is going to be a minor trend, which is going to be lower lows and lower highs. So it's going to be something like this, right? And everything is going to be basically internal. So this is basically what I call external and internal. The external is going to be the one that tells me my bias, and the internal is going to be that minor trend or minor structure that I see every time market do a pullback. This happens in every single time frame. If you look at the daily, if the daily do a pullback, you're going to see a downtrend structure going on the 4-hour. But that doesn't mean we're on a downtrend. That just means the market is doing a pullback, and those breaks that you see on the 4-hour is just part of the pullback, and that's what we call internal structure, okay? So here, as I said, the example that we have is 4-hour, and we're gonna see this minor downtrend structure internally reflecting it on the lower time frame, like 5, 15, 1 hour sometimes, and that's basically what I call internal structure, okay? So when it comes to doing the markup or doing my map and everything, I like to mark up like my range, where I want to literally just have like a certain levels that I know that I have to work, that I'm gonna be working on for the day or for the week or whatever, right? So what I do for me is gonna be finding the last higher high, which for me is gonna be my swing high. Okay, so I'm gonna look for the last higher high, which is gonna be my swing high, and my last higher low, which is gonna be my swing low. Okay, that's basically what we're gonna call it here. My swing high is gonna be my higher high, which is gonna be the highest point of the higher high, and my swing low is gonna be the lowest point of my higher low here, which it could be the wick that you know before the break. One thing that we have to keep in clear and make sure to understand is that for us to a valid higher low is gonna be the higher low that actually create a new higher high. What I mean by this, if let's say that we have a structure here creating higher highs and higher lows, right? We have a higher high, then we have a pullback, we create a higher low. Then we have a new higher high breaking the previous one, giving us a break of a structure, okay? So that's gonna be another higher high. Then we're gonna have a higher low one more time, and then we have a new break above the previous higher high. For us to have this break, like I said, and have a valid or a confirmation of a higher low, we need to see the market breaking above with a body candle, breaking above the previous one with a body candle. So if it breaks with a wick, that doesn't mean you have a higher high. That means you can have a swing high, which is gonna be the highest point of that swing, but it's not gonna be a new higher high. The higher high, we're gonna count it once market break above the previous one with a body candle. That's when we're gonna have a confirmation of a new higher high, and that's gonna be the confirmation for our body higher low. So what I mean by a body higher low is gonna be that higher low that maintain the structure or is telling you that market is continuing into an uptrend because it's basically continue creating that structure for the uptrend. So about the higher low is gonna be, as I said, the most recent higher low that create the most recent higher high. Okay. So once I mark up my structure, like I said, we're gonna look at all of this on the real chart. This is only mapping here and doing a kind of drawing to get the concept, and then we're gonna go into the real chart and explain everything back again, looking at the charts, okay? So here, as I said, I'm gonna mark up my swing high and my swing low as my level or my range that I'm gonna work on. So if I'm in a 4-hour time frame, as I said, I'm looking at my last higher high, my most recent higher high, and my most recent higher low. So when I see this, everything that happens between these two swings here, my swing high, my swing lows, is just part of the internal structure. So it might be looking at like a downtrend like here, right? Going like this. But for me, this is going to be only a pullback, okay? And it's only going to be internal structure because I still have my 4-hour, which is my main structure for my bias, is still bullish. So I'm still looking for buys. But for me, me doing this is understanding what market is doing on the lower time frame, because that's a lot of things that people have problem with, that they understand bigger time frame, but when they drop to the lower time frame, they start getting confused on what market is doing. Are we in a downtrend? I'm looking for sales. I'm looking for buys. When you do this kind of stuff by understanding your swing high and your swing low, you basically literally just having like that all that noise that's basically creating the market by doing this minor pullbacks and minor trend, understanding that just it's a simple pullback the market's doing, and you're still looking for buys. Okay, so how we're gonna be looking for buys in this case? It's gonna be super simple. For me to look for buys or for sales, if we're talking about on a downtrend, I want to have the internal and the external on the same direction, or the same basically path. What I mean by this, so let's say we're bullish here in the 4-hour. So I need this internal structure. If it's creating higher, lower lows and lower highs, I want the internal structure to basically get back again into an uptrend. So once you get to an uptrend, now I'm going to have the internal on my favor as well. And now I'm going to have the external here and the internal on the same basically direction. Bias, looking for buy of both of them. Doesn't matter how good the uptrend could be on the 4-hour. If the internal is bearish, creating lower lows and lower highs, you can now look for a buy. No matter how good the structure could be, like how strong the bias could be on the 4-hour, like bias, a buy, you have to wait for the internal to get into the same direction, or basically start creating new higher highs and higher lows for you to start looking for buys. Okay, so that's basically a set rule here that you guys have to keep in mind, that if we want to be looking for a buys, we have to keep in mind that external and internal have to be on the same direction. Okay, so that's basically here when it comes to the external and internal. Okay, one thing that we have to keep in mind as well is that for us, when it comes to the higher lows and higher high, okay, I'm gonna keep my eyes always on my higher lows. Why? Because my higher lows on an uptrend is gonna be the level that continue as telling me that market is still bullish. When market start basically switching back again to a downtrend, literally breaking below the previous higher low and start creating lower lows and lower highs, that's when we know market is basically back again into a downtrend. So that's why when it comes to an uptrend, we have to keep our eyes mainly on our higher lows. Why? Because yeah, sometimes you might see market giving you a double top here on the bigger time frame, but that doesn't mean anything. Yeah, that might be market having kind of resistance here, but that doesn't mean market has going into a downtrend. That's why we have to keep the eyes on our higher lows and no double tops or higher highs. The higher highs just continue telling you the market's creating new levels and creating new higher highs and continue going up. But what actually tells you what markets continue doing when it comes to a structure is going to be your higher lows when it comes to an uptrend. The same happens on a downtrend. If you have a downtrend here, you have to keep your eyes on the lower highs. Okay, why the lower highs? Because as far as market respect the lower highs, you're gonna continue having that structure to a downtrend. The lower lows are not that important. I mean, they're important, but that doesn't mean like because market have done a double bottom, you're looking for buys. It's just mean market have find support kind of thing, but you're still looking for sales as far as market continue respecting the lower highs. Okay, makes sense for everything right now.
Hey, Vlad, quick question.
Yeah.
As far as the internal structure, are we marking both or looking at both on the 4-hour time frame, or
No.
you just Okay.
We're looking at this marking up. We're gonna be I'm gonna go into like how we find a bias, but we're mainly gonna be looking at 4-hour as our main structure. And this kind of graphics that you guys here or drawing is basically like a lower time frame. Like I said, it could be 5,
Okay.
it could be 15, it could be either 1 hour. Okay. So
Okay.
or it could be 4 hours as well. But mainly we're gonna see into the 5, 15, and 1 hour those minor internal structure because it's a pullback, right? So makes sense.
And yeah,
Yeah.
and as far as validation, are we supposed to look at 2 lower time frames to make sure their internal structures are going in the same direction, or just looking at just one?
One.
Okay.
Yeah,
Okay.
as far as you have the 4-hour, we're just gonna go into like the bias thing now. As far as you have the 4-hour bullish or bearish, having just the 5 minutes in your favor, we couple confirmation. We're just gonna go through the confluences and everything we need to see in order for us to look for a buy or sell. You're good to go. You don't have to see like multiple time frame on the same direction. If they are, it's better, right? Because if you have the 1 hour, 5 minutes, 15, all then bullish is way more confluences, but you don't need that for you to look for a buy, for a setup. Because in that case, you might take it late, because more likely if you don't take it, for example, the 5 minutes, which is gonna be what we're gonna be using as a time frame for entries, you might be late once you see a break on 15, because it's gonna be already too high, or it's gonna be too far away, and it's not gonna be the best entry. Okay. But we're gonna go through that so you guys don't worry about it about that. Okay, so but it's gonna be mainly one with just one time frame on your favor, having the main one, which is gonna be your bigger one on the uptrend. If you see 5 bullish, you can start looking for your possible buys. With more confluences, which is not gonna be just a simple break. Okay, but we're gonna go through that. Any other question, guys? Is everything under? You guys getting this information here?
And the break of structure need to occur with the body candle fully closed above the
Yeah.
recent,
So for you to have a
high.
confirmation of a new higher high, or a new lower low, right? If we're talking about downtrend, we need to see those breaks happens with a body candle. If you have a wick, that's only gonna be a wick, and it's not gonna be a confirmation. We're gonna talk about wick transfer as well, which is a term that I use for understanding when market actually give you the break, and when market when you're gonna be understanding how and when market's actually breaking for you to be able to count that as a break. Okay.
Cool. Thank you.
All right. So as I said, this is gonna be external, internal. So as I said, higher lows are gonna be our main thing when it comes to the uptrend. Lower highs for our downtrend. So when I said, remember that I just said a couple minutes ago that when we are in an uptrend, our higher low or our body higher low is gonna be the higher low that actually create a new higher high, right? That actually break the previous one with a body candle, the previous higher high with a body candle, so to confirm the new higher high. So let's say that you guys have here a new breakover structure, right? So we have a break with a body candle, we have a breakover structure, so that's gonna be our body higher low. As it's our body higher low, that's gonna be my swing low. It's gonna be higher low is the same thing as a swing low. We're just gonna find the lowest point of the higher low, so it could be our swing low. And when it's gonna be our swing high, it's gonna be the highest point of my swing of my higher high. Okay, so let's say market do this. Okay, do a pullback, do a higher low, and then try to break through here, but it fails. Okay, you try to break here, do a wick, but it fails here and doesn't break. It doesn't break above the level with a body candle. So at this point, this is gonna be a higher low right here, but it's not gonna be a higher low, a body higher low, or structure higher low, because it wasn't the higher low that actually created a new higher high. So for me, it's gonna continue being my swing high, my swing low, this one right here, which was the last higher low that actually created a new higher high. So this one right here is still a higher low. We're just gonna see it as a liquidity grab. We're gonna go talk about that when it comes to liquidity, but we don't gonna see this as a structure higher low. It's gonna be a higher low for liquidity, but it's not about a higher low. So for me, I'm gonna continue basically going into my swing low right here, and until market doesn't give me a new break with a body candle, I'm not moving my swing low, my higher low, my body higher low. Okay. even though if market continue doing this, okay, higher lows like this, that's still gonna be my swing low here, or my higher low, or my body higher low structure when it comes to a structure, because that was the last one that actually created a new higher high here. Okay, make sense? All right,
Yeah.
cool. So when
Yes.
it comes to the downtrend, same thing. If market do a new lower low, right, and it fails here to create a new lower low with a body candle, so that's gonna be a lower high, which is fine. But the lower high, a body lower high, our body lower high is gonna be the lower high that actually created a new lower low, which is gonna be this one, and this is gonna be my new lower low. So that's gonna be my swing high and my swing low. It's gonna be different here when it comes to uptrend. It's gonna be swing low here, higher low, and my swing high is gonna be my higher high. On a downtrend, it's gonna be swing high, the lower high, and my swing low, the lower low right here. Okay, so that's basically how we're gonna be, like I said, marking up our range or our level to work, finding our last higher high and our last higher low, marking up our swing high and swing low, and everything that happens between these two swings here, we're just gonna count it as an internal structure here that is just created by the pullback that the market is doing on the bigger time frame. Okay, so that's basically what it comes to lower swing high and swing low. Okay, let's go for a couple examples so you guys can see. Okay, so let's go based on, before that, let's go into like the bias, how I find my bias to make it pretty simple for you guys. So I mainly focus on the 4 hour and 1 hour for my bias to look for setups, buys, or sales. Okay, I also look at the daily to look at where I'm at. If I'm buy, I'm looking for buys and looking for sales, but I'm not gonna be taking my decisions based on the daily time frame. I see it and I'll take a consideration sometimes on where it is. It's in a daily order block, it's in a swing high of the daily, and things like that for me to be looking at for possible decision that I'm gonna make. But I'm not gonna be looking at, oh, daily is bullish, I'm looking for buys. No, it's not gonna work like that, because from daily to a 5 minutes time frame where we're gonna be looking for our setup, there's a huge difference between time frames. So that's why we're gonna basically make focus the most of the time on the 4 hour and the 1 hour, 4 hour setups. Okay, so this is how I look for my setup super quick. 4 hour uptrend, 1 hour uptrend. I'm looking for buys 100%. Okay. 4 hour on an uptrend and 1 hour on a downtrend, we're still looking for buys, okay? But we can look for momentum or those short sales until market get into a certain levels, okay? I'm gonna explain that in a minute so you guys can understand. So 4 hour on an uptrend and 1 hour on a downtrend, okay? We're gonna be still looking for buys, and we can look for momentarily sales until they get to a certain levels, like an order block and things like that, okay? When it comes to the downtrend, 4 hour on a downtrend, 1 hour on a downtrend, we're looking for sales 100%. 4 hour on a downtrend and 1 hour on an uptrend, we're looking for buys. We're still looking for, we're looking for sales, and we're looking for possible momentarily buys, okay? Which is optional here, the sales here and the buy here when the 1 hour is in a downtrend or uptrend. It's up to you. You don't have to go through that. But you guys can see that mainly I'm focusing my bias on the 4 hour. 4 hours is gonna be always telling me what I'm looking for the day. If it's on an uptrend, I'm gonna be looking for buys 80% of the time. If it's 4 hour, 1 hour is bullish, both of them, I'm looking 100% for buys, for buy. If market the 4 hour and a 1 hour is down, I'm looking for buys still, but I can look for momentarily sales until market get to a certain level that makes sense for me to stop looking for buys. Sales, for example, here. And I'm gonna explain in a couple minutes for now. And if it 4 hours in a downtrend and 1 hour in a downtrend, sales 100%. 4 hour in a downtrend and 1 hour on an uptrend, we're still looking for sales, and we're gonna be looking for momentarily buy until market get to a certain levels for us to look for the setup. Okay, so let's look for the examples here when it comes to the swing high, swing low, structure here, internal structure, and all that. And then we're gonna go into wick transferring and everything. Okay. So on the 4 hour, I'm gonna go into a structure here. Okay. So here we're gonna go into market structure. Okay. Good. So we're gonna start mapping in here. Okay. So first thing that I see is gonna be a higher low and a higher high. Okay. So we're gonna go back again here. So what we have a previous break above my previous higher high, which was this one. We actually break above this one with a body candle. For that reason, we have a body higher high and we have a break of a structure. Okay. So now that we have that break of a structure, I'm gonna mark my swing low, which is gonna be my higher low, and my swing high, which is gonna be my higher high. So what's gonna be my swing low? My lowest point of my higher low, which is gonna be this one. Okay. Why is this one? Why not this one? All right. As I said, it's gonna be kind of different from what you've seen before. But for me, I'll pull back. It can be created with just one candle, bearish candle. I don't want to see a multiple candle like a lot of people do. With just one candle for me, it's enough for me to have a pullback and count it as a higher low. So here what I have is a here higher low and then a new higher high. So what was the last higher low that created the most recent higher high? It's gonna be this one right here. So I mark up my swing low right here. And what's gonna be my higher high is gonna be my swing high or my higher high. But when I'm gonna confirm that I have a new higher high, for you to have a new higher high, you have to expect, you have to wait for the market to start doing the pullback. And for that, we need at least to see a bearish candle. So when market did this, a bearish candle, now you have a confirmation of a higher high. So now you can mark up your swing high or your higher high right here. Okay. Why didn't I mark up this one right here? Because that candle was bullish. This candle end up start bullish, do my swing high, which is, as I said, the highest point of my higher high, and then end out bearish. So that's for that reason, this is gonna be my new higher high. So now here I mark up my break of a structure because I have a break with a body candle. I have my higher low, which is gonna be my swing low, and I have a higher high, which is gonna be my higher high. So what we talk about here. So once you mark up your swing low and your swing high, you understand that you're looking for buys because your structure is bullish on the 4 hour. So everything that happens internal here or between these two lines or two swings, it's gonna be internal structure, and you don't have to worry about that. Even though market might look as a sell here, that you're gonna be looking for sales here. Okay, I'm gonna go for example on the lower time frame, like 15 minutes maybe. Okay, so we're going to 15 minutes. By marking up these two swings here, I understand that even though I'm dropping to the lower time frame, I understand that I'm still looking for buys here. Okay, and I understand that what is happening here, this minor trend that is going on, which is look like market creating lower lows and lower highs, is just a pullback of the 4 hour. And this is going to be my internal structure, that exactly what we were talking about. So here's going to be external, my bias structure, and between these two swings is going to be our internal structure here. Okay. So when we can look for buys, like I said, we had to wait for this structure, minor structure, to be basically over and start looking for higher highs and higher lows. So the external and internal can be on the same direction here. So, okay. So you guys can see here, we start getting bullish here, back again, and then we start looking for buys here. Okay. So at this point here, we just already on bullish here, and you guys gonna make sense when we go through the liquidity and everything. So here we already get back into an uptrend here because we start creating higher highs and higher lows. And that's when you can start looking for buys on the internal structure here. As far as market continue creating these lower lows and lower highs, you can now look for a buy. Doesn't matter how bullish the market might look like here on the external structure. If the internal is not on your favor to the uptrend, the same as the external, you cannot look for a buy here. Okay, and that's what I mentioned before a couple minutes ago. Okay.
Hey, Black, real quick on the internal, from where the direction changed, would you mind just doing a quick higher high and higher low identification in there so we can see for our own understanding in there how you,
Yeah, sure.
Yeah.
So here we have a new lower low here.
Yeah.
Right here. That's the last lower low here because it breaks below the candle here with a body candle. So that's a break of a structure. Here internally, you're gonna have also a structure like this: break of a structure, lower lows, lower highs, swing low, swing low. But we're not gonna be paying attention too much to this until market get into an uptrend here. Okay. So what I do is gonna be looking for the last lower low. For me, this is gonna be my last lower high. Okay. Now I have a break of a structure here, or a break on my favor, okay? Break on my favor. And now we're gonna have a new swing low, which is gonna be my higher low. And here you're gonna have my swing high, which is gonna be my higher high. Okay? So at that point, I'm already market start giving me a structure to be bullish. Okay? Now we have here we have another break. Okay? So we're gonna talk about the wick transferring here. We have a new break of a structure here. Now I'm gonna mark up my swing low or my higher low, which is gonna be this one. And now it's gonna be my higher high, right? It's the same thing as we do in external structure. I don't do it too much because we don't have to mark up exactly here internally. We just need the market giving us like start giving us those breaks on our favor to start seeing that market's bullish, okay? And you guys can see market start creating new higher highs, new higher low here with a new break, new higher low here, new higher high here. So as you guys can see, as markets still continue breaking above the previous swing high or the previous higher high, that's when I'm gonna have a confirmation of a new high. So here I have the break previous with a body candle, so that's when I have a new higher high, and now I can mark up my last higher low, which is gonna be this one right here. Okay, and this what happens here is just a liquidity grab, and it's gonna make more sense when we go through when to understand when market is basically switching into a downtrend on uptrend. Does it make sense for you guys here? All right.
Yeah.
So as I said, external, this is gonna be our external structure, and internal, you guys can see how I mark up my swing high and my swing low. So everything that happens between these two lines, I understand that it's just a pullback of the bigger time frame, and this is gonna be internal. But the internal is gonna be as important as the external. If the internal is bearish and the external is bullish, I can now look for a buy until the internal also get bullish. So now I have the external and internal on the same direction, and now I can start looking for my possible buy here, okay? One more time, we're gonna go to the 4 hour, and we're gonna still map in here. You guys understand the internal and the external here, okay? So now we have a new, what? New break of a structure because it breaks above the previous one with a body candle. So now I'm gonna go into marking up my break of a structure right here. And I'm gonna look for the last swing low that created higher high. What was it? My last swing, my last higher low, the lowest point of my swing low or my higher low is gonna be here. It doesn't have to be a bearish candle. It could be a bullish candle. What happens here? Market start bearish, do my swing low, and then end up bullish, okay? So that's gonna be my lowest point of my higher low. So that's gonna be my swing low or my higher low, and now we have a new higher high. When we're gonna have a new validation of the higher high, when market start doing a pullback, which could be a bearish candle. So now I have a new higher high. So now I have my swing high here, mark up, okay? So now we have what? A break of the previous high with a body candle. So that's a confirmation of a new higher high and a new break of a structure. And I continue moving my higher low to the most recent one, which is going to be this one right here, which is the lowest point of my new higher low. We have a new higher high, but we don't have a confirmation yet. We have to wait for a bearish candle to close. Okay. Now we have a bearish candle. So that means this is going to be my swing high. You see, I don't mark up this one as my swing high or my higher high because it's not. It's going to be my highest point of my higher high, which is going to be my swing high right here. And mark it one more time, break with a body candle. So that means we have another break of a structure with a body candle. And we're moving our higher low to the most recent one, which is going to be here. Okay. Again, we market start giving me a pullback. So now I'm going to mark on my swing high, which is going to be this one right here, and my higher low. And everything that happens here is going to be internal structure. Back again, 15. You guys can see we're creating lower lows and lower highs. Are we going to be looking for sales here? No. It's just a pullback. So I understand that what market is doing here is just a pullback. So I'm going to be waiting for the market to get back again into an uptrend. And once it does that, I'm going to be looking for my buys. The same thing here. What happens here? You guys can see we have a breakover structure here. Boom. We have our swing low here. Then new higher high here. A new higher low here. And market basically continue creating higher highs and higher lows. Okay, we're gonna go into like how to look for the right entry and everything, but that's when you're gonna start looking for possible buys when market get back again into an uptrend. Okay, does it make sense for you guys here? Everything?
Yeah.
Yeah.
All right, great. So
it makes sense.
cool. So that's basically when it comes to the swing high and swing low. You guys can see how I mark up everything. As I said, it's gonna be always on 4 hour. We're gonna mark up our swing high and swing low, and understanding that everything that happens between these two lines is just gonna be internal structure, and it's gonna be reflecting as lower time on the lower time frame as a minor trend, like at lower lows and lower highs. But that doesn't mean anything for us. It's just mean the market is doing a pullback, and we just have to wait for that pullback to be over. Of course, we don't want to be just waiting for the market to start getting back again to an uptrend. We're gonna be matching that with other blocks and more confluences, which we're gonna go through that in the next classes here. Okay. So that's basically what we're looking at into the structure. There's one thing that I always like to teach people, which is gonna be swing transferring. What I mean by swing transfer, which is gonna be something that you guys are gonna be using a lot, and it's gonna tell you exactly when market's actually creating a new high, a new lower low, and when you actually have a confirmation of a break. So a wick transfer is gonna be something like this. I have a new structure creating higher highs and higher lows. So let's say we have a new break of a structure here with a body candle, like I said, and let's say this one create a new higher low right here, and then do a double top here. But in this case, market actually end up creating a wick, which is gonna be higher than the previous higher high. So it's gonna be something like this. And still, you don't have a new higher high because remember, for us to have a new higher high, we have to have a body candle closing above the previous one with a body candle. But here, you're gonna have what I call wick transferring. So now, my swing high or my new higher high is gonna go from this one to this one now, to the most recent swing or most recent wick. And now for the market to give me a new break or a new higher high, instead of breaking this previous one here, you have to break above this previous wick or most recent wick with a body candle. So now market had to break above here with a body candle. If he doesn't do that and it just go below it, but do another wick, something like this. So now we're gonna be transferring the wick from the most recent to the recent to the most recent, which is in this case gonna be from here. Sorry, from here to here. And now for you to have a new break of a structure or a new higher high, market had to break above this one with a body candle right here. Same happening on a downtrend. If market do a new lower high and a new lower low, so this is your new lower low, and market do a lower high like this, and try to breaks below it here, and it fails, but do a wick surpassing the previous one, now you're gonna be transferring your swing low, your lower low, from here to here, and now for you to have a new break, market have to break below this one with a body candle right here. If you continue failing and doing a wick but surpassing the previous one, you're gonna continue transferring from one to another until market breaks with a body candle below the most recent wick. And that's when you're gonna have your confirmation of a new higher high or a new lower low. The same happens on this. If you have a new higher high like this, and market did this, and it fails, that's your higher low, right? Your most recent one. And market try to breaks below here and do a wick. We're gonna call this wick. We're gonna go liquidity grab, but also it's gonna be wick transferring. So you guys keep in mind on this one. And now for us to have a break of the previous higher low, market had to break not below here. It's got to break below here. And sometimes you might see this happening almost every day on the market, that market just do that and continue just going like this and doing like this, wick transferring from one to another, and never breaks below the swing. And it breaks below this one, but already market transferred to this one. If it doesn't break below this one with a body candle, you don't have the confirmation of the break. If it doesn't break below this one with a body candle, do the same thing, it transferring from here to here. And until it doesn't break below that, you don't have the confirmation of a break. And that's gonna be good for you guys to understand when you actually have a break, because it's gonna be super important to understand how many breaks market has done in the past for you to understand if you're still looking for simple buys or wait for more confirmation to look for a buy or a sell. It's gonna make more sense when we go through that in the next classes here. But let's go into the wick transferring here so you guys can understand what I meant. Okay, so same thing. We're gonna look for our higher high, which is gonna be here, right? Our swing high, and that's gonna be our higher low right here. Okay, so let's say what happens here. All right, so we have a new breakover structure with a body candle, right? So that means we have a new higher high, right? And a new higher low. I cannot mark up my new higher high because I don't have a pullback yet. So I have to wait for a pullback. We have a pullback, so I'm gonna mark up my swing high, which is gonna be my highest point of my higher high, and my higher low, which is gonna be my most recent higher low that carry my most recent higher high. All right, so we have another break here. We cannot mark up our higher high, but we can mark up our higher low. So I'm gonna mark up my higher low here, and I have to wait for a pullback here. So here, let's see, not yet. All right, so we have a pullback. So now we have a higher high confirmation. Sorry. Back again, the same thing here. We have another higher high. So we're gonna mark out our higher low, which is gonna be here. And we're gonna be waiting for the pullback here to mark up our higher low, our higher high, sorry. All right, so now I'm gonna mark up my higher high. All right, so here you guys can see that we barely kind of transferring from one to another. So you guys can see market try to breaks below here with a body candle. It fails, so it's gonna be transferring the wick from my swing higher low from here to this one, right? And market try to breaks one more time here, and it fails. And now I'm gonna be transferring from this one to this one right here. So for me to have a break of the previous higher low, which is gonna be here, I need to see the market breaking below this candle. I mean, below this swing low here with a body candle. If it doesn't do that, I don't have a break of a structure here or a break. Okay. Now we have the break because market breaks below here. Okay. That's basically what a wick transfer is. Let's go for a couple more examples so you guys can see when it comes to the higher highs and higher lows here. Okay, let's see. I'll see so many examples. All right, so here we can see an example. Okay, looking for so you guys can see exactly what I went through. So here we have a clear higher high, higher low. So I'll mark up my higher low, which is gonna be all the way down here, or my swing low, and here you're gonna mark up your swing high, which is gonna be your higher high. We have to wait for the pullback. Okay, now we have the pullback. I'm gonna mark up my higher high right here. Okay. Okay, so you guys can see what happens here. Market try to breaks above this level here, but it fails, right? And do a wick, but that wick is higher than the previous one. So now that's what we're gonna be applying the wick transferring. So now I'm gonna go from this wick to this wick right now. And now for market to give me a breakover structure or a new confirmation of a breakover structure, instead of breaking this one, I need to see the market breaking above this one right here. And now here we have the confirmation of a new higher high. So we have a new higher high. I'm gonna mark up my new higher low, which is gonna be here. Okay. Does it make sense for you guys? Like what we're gonna looking at here with the wick transfer?
Yeah. Yes.
Make sense? Okay, cool. So that's basically, I mean, you guys maybe don't see really important here, but when it comes to understanding when market have done a break on the lower time frame for your entries are gonna be really important because we're gonna be using this kind of wick time frame on the bigger time frame, like the 4 hour, to understand when market's actually breaking a level or creating new lower low, new lower highs. But when it comes to entries, you guys gonna see that this happens a lot. The market try to break some levels and it fails. And when you understand that, it's gonna be more easy for you to understand if market is basically bullish or bearish for you to start looking for your buys or your entries and everything. Okay. So when it comes to the change of character, when I know market is basically going from an uptrend to a downtrend or a downtrend to an uptrend, super simple. And I'm gonna ask you this question for you guys to see like how you guys see things here, and let's see if you guys are on the same page as me. So let's say we have a new higher high, a new higher low. If market breaks with a body candle out of the previous higher low, do you guys count this as a change of character? And now you're looking for sales or looking for buy still here? Who can
Or
tell me?
sales.
Huh?
I'm looking if the previous if the previous low that
This is gonna be your previous higher low, and this is gonna be your swing high, right? Higher high, higher low. Market breaks with a body candle below the previous higher low, like this, like say. You guys gonna be looking for buys or for sales here?
for
Do
sales.
we still have to wait for
Yeah, for a
a
retest.
lower high, no?
For a retest
So we
for
still-
what?
Maybe
So we
wait
still
a
need to wait for the
second breakout.
retest. Yeah.
Should we
So
wait
for-
for another
so-
lower high?
No. At this point here, I'm still looking for buys. So in this wave to see market, that's what I want to ask you guys and see if you guys understand this. But clearly you guys see that you might looking for sales here. For me, this is gonna be only liquidity grab and a pullback. One break is gonna be liquidity grab or a pullback. For me
Oh,
to
I
see
see.
a change of character, I want to see two breaks back to back to the downside. So what I mean by this, so if I have an uptrend here, I want to see the market giving me a break here, right? With a body candle. For me, this is going to be only a pullback or liquidity grab. And when market do a lower high and give me another break here, that's when I'm going to count that market has actually changed from an uptrend to a downtrend. Okay. So for me to have the first break, like I said, is going to be only liquidity grab or a pullback. And when I'm going to count as a break of a structure for real, it's going to be on the second break. So when I have a second break, that's what I'm going to count as a new change of character, and all depends on the time frame. If you see this on the 4 hour, then definitely you going from a downtrend to an uptrend. I mean, sorry, from an uptrend to a downtrend. If it happens on the 5 and 15, which is always going to happen, yeah, you're going to have the 5 minutes and 15 minutes basically getting bearish internally, but we're not going to be, as I said, we're not going to pay attention to the lower time frame. We're going to be mainly going into our bias on the 4 hour and 1 hour. So if 4 hour do this, 2 breaks back to back for an uptrend to a downtrend, that's when I'm gonna know that market has going for an market have changed character, and now I'm looking for sales. If I'm looking, market is basically in a downtrend like this, and we have only 1 break, for me, it's gonna be a pullback or a liquidity grab. And when I'm gonna have the confirmation of a new break of a structure, market getting from a downtrend to an uptrend, is gonna be on the second break right here. And we only gonna look this for change of character on the 4 hour. Okay. If it happens on the 5, if it happens on the 15 minutes, you are not looking to change your idea for buys or sales based on only a simple 2 breaks on 15 minutes. Okay. So let's go
So
for
external-
examples. You guys, okay, go ahead.
Sorry. So external structure need to do 2 breaks. of
Exactly.
Structures.
Exactly.
Okay.
And the break has to be with an actual candle and not a wick, correct?
Yeah, it had to be with a body candle the whole time.
Okay.
Both breaks, okay? So for us to have the actual confirmation. And as I said, on the 4 hour here, that's what we're gonna look into, change of character. If it just happens with 1 break, it's only gonna be liquidity grab or pullback. And we're gonna look for a couple examples so you guys can see what I mean by this. Okay, it's gonna go here. Go for a downtrend to an uptrend here. Right here. All right, cool. So here we have a clear example. Boom, 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 boom. Okay, cool. So here we have a clear higher high and a higher low right here. So you guys can see here, I have a break of a structure with a body candle. Then we have another break of a structure here. See why I'm marking up as my new break of a structure, because you guys can see higher high. We have a bearish candle, which means we have a confirmation of a new higher high. So now market breaks above this one with a body candle. So that's my new higher high or break of a structure. Now this is going to be my new higher high. Okay. And what's going to be my higher low? It's going to be this one here. Okay. So what happens here? Market actually breaks below this one with a body candle right here. Okay. Even if a bullish candle is just basically because of trading view, but that's a clear break here with a body candle. So on your idea, you might say, okay, you know what? I have a break of a structure. I'm still looking for buys. I mean, I still looking now I'm going to be still looking for sales. But for me, this break right here is just a pullback or a liquidity grab. For me to have a change of character from a downtrend to from an uptrend to a downtrend, market have to breaks below this one right here with a second break. And what happens here? Do market breaks below with a body candle?
No, it didn't.
So that means we just 1 break. And what happened next? We're still looking for buys. See? So 1 break here for me is going to be just a liquidity grab. If market would have breaks below this level here with a body candle, then at that point I have 2 breaks on the downtrend, and now I'm going to be looking for sales. But here with just 1 break, I'm going to look for a liquidity grab or a simple pullback, and I'm going to still looking for buys. And you guys can see the example here, how market continue going up.
Hey, Black, real quick, if you can go back to where you were. So in this case, where the wick went down below your lower low, would that be a liquidity grab for you?
Which one? This one here? Yes.
Okay.
Because it's basically my swing low. It grabbed liquidity here below the swing low.
Yes.
And it didn't break below it. And we're going to do the weight transferring now. So it's going to be for us to have a, now if you want to say, okay, if market continue breaking, where do I have market to breaks for me to have a new break of a structure? It doesn't have to be here, because this is going to go from this wick to this wick now. So for me to have a new break of a structure, not market had to break below here with a body candle to have the second break. And that's what you're going to be applying the wick transferring here. Does it make sense for you guys here?
Yes.
Yes.
All right, let's go for another example here. Okay, let's see. I'm gonna go into sales for buys. So here you guys can see clearly that we're in a downtrend right now. You see lower lows and lower highs. So I'm gonna look for a break on my favor. It's gonna be here. We're gonna be waiting. Okay. So here, you guys might think, okay, market had to break above here for us to have a break. No, it doesn't have to be like that. It could be we only need 2 breaks on the 4 hours. So if we're gonna go into what we just went through a couple minutes ago, which is gonna be our swing high and our swing low, I'm gonna look for my swing high, which is gonna be the most recent lower high, which is gonna be this one, and my most recent lower low, which is gonna be this one right here. Okay, so everything that happens between these two swings are internal structure. But if market internally here on the 4 hour do 2 breaks like this on the 4 hour, doesn't matter that market haven't break above this level right here, your swing low, your swing high, sorry, you already bullish because what we're looking at is 2 breaks on the 4 hour, even if it's internal or external. Okay, does it make sense?
And so those 2 breaks are really
Mainly on the
within-
4 hour.
Okay, and then it's within the internal structures
Exactly.
being created.
It could be like, it could happen like this. Market breaks above the previous swing high, pull back, and another break. Okay, that's fine.
Mhm.
But if market do it, you have your swing high, your swing low. If market do 2 breaks internally on the 4 hour here, it's still valid. And you guys, with these 2 breaks, you're already looking for buys here. Okay, doesn't matter if it's internal 2 breaks. So for example, here we have this way here. Sorry. So here you guys can see market didn't break above this one, but actually breaks above this internal one, which is gonna be here. Why here? Because I'm gonna have the swing low here, my lower high here. Market didn't break, transfer the wick from here to here. We transfer what we just went through. And now for me to have a new break, market had to break above here with a body candle above this wick. So that's why I mark up this one. So I have the first break right here. And if market breaks above this one right here, now I have the 2 breaks to the upside. Now I'm looking for buys 100%. See? Back again. That's going to be the confirmation for me to look for buys 100%. And still, when market do only 1 break, which is going to happen a lot, for example, here, what we just went through, you guys can see that we have a new lower high, new lower low here, and then we have a break here that happens to be above this level here. So if you're looking for sales here, 1 break, what it means, I just said it to you guys,
It's
is
to sell.
exactly, this is only a pullback or a liquidity grab. And what happened next? Market continue dropping to the downside. So mainly when you're looking for buys or sells on the 4 hour, if you have if you're bullish and market have done only 1 break to the downside, we're only going to count that as a liquidity grab or a pullback. The second break is just going to give you the confirmation that markets actually have changed from a downtrend to an uptrend, or for a downtrend to an uptrend like this. Here you guys can see only 1 break, and that being just a liquidity grab, a pullback, and then continue going down because market never had changed a structure here. Okay, let's see if I can find an uptrend to a downtrend right here. So for example, right here, you guys can see same thing. We're bullish here, right? Creating higher highs and higher lows. So what's gonna be your high and low right here? It's gonna be your swing high is gonna be here. Your high and low, sorry. And your swing high is gonna be once market do a pullback. Now you have a swing high. And market here create a new what? High and low. So it's gonna be here. That's gonna be a break internally here. Okay, because still my body high and low is gonna be this one because that was the actual one that created the last higher high. You guys can see the market try to breaks above here with a body candle. It fails, do a wick. So what we do here, wick transferring from here to here, Now my swing high is gonna be above here. And now for me to have a new break of a structure or a new higher high, market have to break above here with a body candle. But it's still, as I said, even though this is not a higher low, a body higher low structure, based on a structure, it's still a higher low. And we're gonna take it as a liquidity grab. So when market breaks below here, a lot of people might say, oh, I'm looking for sales. You guys can see 4 hour here. No, that's only a pullback or liquidity graph for me. And what happened next? Market continue going up here. And what happens on this exact example here? You guys can see market do a lower low. So if market would have breaks below here, it would count as my second break, even though I have my swing low here. But if it do 2 breaks internally on the 4 hour, I'm gonna count it as a 2 breaks on the 4 hour for me to start looking for a change of character. But market never breaks below it. You guys can see it do wick transferring here, and it never breaks below it. So I'm continue looking for buys here. All right. And same thing here. What happens? Market try to breaks right here. Market to go up. Right? And we have a new higher high, a new higher low internally here. And market do one more time, a push, and it might break below here. This is only going to count it as a liquidity or a pullback. What happened next? Market goes down. No, I mean, the pullback can be a strong or whatever, but you guys can see market get to a certain level, like an order block, and then continue basically being bullish. And you guys can see we continue with the buys. You see? So that's why you have to keep in mind when you see like one break on the 4 hour, it's just a pullback and liquidity grab. It's gonna make more sense when we talk about that tomorrow on the liquidity grab and order blocks. But it's good for you guys to understand, like we just one break, it's just a simple liquidity grab or a pullback. And that's gonna happen also on the lower time frame. You're gonna see 2 breaks on 15, 2 breaks on 5, and that's when you're gonna know that the internal structure is going from a downtrend, from an uptrend to a downtrend, where you have those 2 breaks back to back on the 5 and 15 minutes. But as I said, on this lower time frame like that, we're not gonna count it, and we're not gonna pay attention to that. We're just gonna keeping into counting on the 4 hour structure. When we see these 2 breaks, that's when we're gonna be changing our bias from a downtrend to an uptrend or an uptrend to a downtrend. Make sense for you guys? Any question for me?
Hey, Black, question. So I don't know if you can see my cursor, but the last is that a break of structure you marked over there? If this were supposed to be on a 5-minute time frame, where would you have been? Yes, that one. Where would you have been looking to enter? A break above that one into the uptrend?
This one right here. If you're talking about like a lower time frame, like 5 minutes and 15, you're saying?
Yes. Yeah.
Yeah, at that point, I would have waited for the market to give me a break on my favor, and then liquidity grab, which is gonna be something like this, and maybe an order block, which is gonna be something like this, and I would have looked for an entry around here, maybe something like that. Or
I
this is
see.
a 4 hour time frame, but it would be like
Yeah, yeah.
something similar, but on the lower time frame.
Okay. Okay.
All right. So we're gonna go into like that. Don't worry about it. I don't want you guys to get overwhelmed with all the information, but we're gonna
Okay.
get there. You guys it's gonna make more sense when you guys have the whole thing here. Okay. Any other questions here about
Awesome.
market
Can you hear me?
structure?
Can you hear me? Hello?
I can hear you.
Oh, cool. Soon will the recordings be posted on our Telegram chat?
It's gonna be it takes maybe 30 minutes for it to load in the cloud. So I'm gonna
Okay.
send it back again, and once I have it, I send it over. You guys can download it and basically start using it. I start reviewing it. Okay.
Cool. Appreciate that.
Great, thank you.
All right. So yeah, guys, I mean, I see you guys tomorrow. Any questions, just let me know through the chat. This is basically market structure. Tomorrow, we're going to talk about order blocks and liquidity grabs, but it's good for you guys to understand market structure. So go through the video, review it. If you have questions, just let me know, and we go over tomorrow. And as I said, if you have to go back again and watch the video or do everything back again from scratch, like we did today, we do it one more time, because this is going to be what's going to keep you on the right side of the market. If you don't know where you are, it's gonna be pretty difficult for you to find a good setup. If you're looking for buys when you're in a sale, or you're looking for sales when you're looking to buy, then you're definitely gonna be, even though if you're patient and wait for a good setup, you're never gonna be able to have good setups because you're gonna be going against the market structure. Okay.
Are you be able to ask us individually to understand like the structure, like internal and external?
Yeah,
So-
we can do different. What I do by this is like we go through the whole information, like I said, and then once we got that, we're gonna go into back testing and go doing all that. So we're gonna have like 3 weeks or 2 weeks to do all that. So you guys gonna do the markup by yourself. I'm gonna say, go and do this and let me see how you do it. And then, but once we have the whole strategy, I don't know if it makes sense.
Yeah, it makes.
All right.
Thank you.
But we're gonna do that. Like I said, that's gonna be the back testing, basically phase, and we're gonna go do that. Almost every single night until you guys get the master of the strategy. Because as I said, all the information is gonna be pretty good. You might understand it, but you understand it because I explained it pretty good and I know how to do it. But once you do it by yourself, that's when it's gonna be kind of hard. That's what we're gonna be doing the back testing and everything. Okay.
Great.
All right, guys. So I'll see you guys tomorrow. Any questions, just let me know through the chat. And once I have the video, I send it over so you guys can review. Okay.
Good. Thanks a lot, man.
Super.
take care.
Thanks very much.
You too.
Thanks, man.
Thanks.
Thank you.
Thank you.